Hey traders, Raghee here, and in this recap video, well, first it was G20 and we saw the result of that today with the gap higher and the way in which this market has digested what seems to be an initial wave of optimism, hopium even, that we're going to maybe have 90 more days to figure things out. Well, if you've been listening to me here in the recap video for any length of time, whether you're a member or not a member, I've really felt it's very important to explain to you guys that regardless of what happens with this trade negotiation, the ceasefire, and subsequently whatever the middle ground is going to be, the Chinese economy is in the midst of a slowdown, emerging markets, Europe, and now the US. And this has a lot to do with the dollar cycle that I've spoke a lot about, where US dollars are taken out of emerging markets and taken out of markets that are abroad and brought back to the U.S. And that's why we see the U.S. equities markets rally for a brief amount of time as emerging markets and markets abroad fall. And it looks like a decoupling when all it really is dollars coming out of the foreign markets and into the domestic market. And then finally, I think we're really seeing overall bonds and the Dow tell a very interesting story. One of the things I noticed about the 10-year was that 10-year yields are really not, take a look at the 10-year yield today. And this was amidst a massive gap up in the broader averages. If you look at that historically, the way in which the 10-year yield has continued to head higher, the chart of the 10 years higher, so yields are lower. I believe peak yields are behind us. And so you see the equities markets not trigger a sell-off in bonds. Pay attention to that. Pay really careful attention to that, as well as the fact that we did not exceed these overbought zones on both the Dow and the S&P. So keep a really close eye on that. I am bearish amidst these gaps higher in the market, especially the Dow and the S&P, and at these levels. Okay, at these levels, especially in the Dow and the S&P. NASDAQ and Russell are going to continue to be much easier shorts. Those have much better, I believe, bearish market structure, even though we saw a lot of volatility today. Most definitely the Russell. The Russell's probably your easiest short sell amongst the four. But we got G20 behind us. Now we need to focus on OPEC. And the OPEC meeting starts the 6th, which is this Thursday. And one of the questions I've been getting is, Raghee, are we going to see this big rally on G20? And the answer is no, because the market knows just a handful of days later, we're going to find out what OPEC decides to do with production. And just like we talked about, especially members, on Thursday and even the week preceding last week, we said, look, there was going to be a pop on this G20 because there's no way either one of these two leaders from the U.S. president to the Chinese president were going to be able to go back to their respective countries with nothing in hand. And even kicking the can down for 90 days, at least we come back with no tariffs on January 1. That's a something, right? Well, I think the same thing is going to happen with OPEC, especially Russia and Saudi Arabia, where there's just no way they can all meet in Vienna and not come back with at least some sort of framework for a production cut. And that's what I believe we're going to see coming out of that, which, just like the equities markets in G20, I think we're going to see the crude market, the energy markets, mostly crude, and OPEC, we're going to end up with a rally to the upside. And I want to short that, period. Now, the closer we get to Thursday and we can start to factor in what a $2.40 move would mean, that's the upper end of the 68% probability. We'll factor in a 32 more extreme move to the upside as well. But ultimately, I want to find a zone about 24 hours out that's at least $2.40 from current highs, and then see what kind of rally we get on OPEC, and then find that exhaustion level and short into it. Not that different a game plan than what we're doing with this particular rally. And whether that's shorting Germany, Italy, France, Facebook, Netflix, whatever that list is, and I'll talk about a lot of that in the premium video, but it's the same tactic, right? The market's different, and the event, the actual catalyst is different, but the psychology is very similar. So that's something to keep an eye on. OPEC coming up Thursday, and I'll see you in the next update.